We're rolling. Welcome to the REI Rookies Podcast, the Real Estate Investing Rookies Podcast, episode number 93, where we invite you to follow us on our journey towards financial freedom using the power of real estate. I'm Josh Koth, and Jack Haas is doing something very important away from the office right now. Here at REI Rookies, we believe in a couple key principles. Number one, the best way to retain information is by teaching it to others. And number two, a rising tide lifts all boats. We're not competitors, we're a community. So let's get into some real estate investing. All right, guys, this week, Jack interviews Dr. Dan Handford. He's a multifamily investor who runs the Tough Decisions for Entrepreneurs podcast. We'll include the link in the show notes. Hosts virtual meetups and teaches people how to invest in multi-unit properties through syndication. And he owns over 825 units. So check out the interview between Jack and Dr. Dan Handford.
Well, we have Dr. Dan Handford on the line with us today. Can't thank you enough for joining us, Dr. Dan.
Well, I'm really looking forward to the episode today and the conversation, and feel free to please just call me Dan.
Okay. So that, we're going to have to tackle that right off the bat. You were a doctor in what?
So my background is in chiropractic. So I'm a chiropractic physician still licensed here in South Carolina.
Sure. So what made you want to get into real estate investing?
Well, making too much money, I guess, because, once you start to make a little bit of money, you start to have to write more money to the government. And I was tired of writing six-figure checks to the government. And so one of the solutions to that is to invest in real estate.
Right. That's happened a few times here now where we're getting some out-of-state investors a little interested in our market just because of that reason. They're on the coasts and it's nice and safe in my part of the world.
Mm-hmm.
So I kind of know a little bit of your background, but regarding this, but you've been moving pretty fast. You got, I understand, $125 million in assets so far that you're controlling, and you're own over 1,300 apartments. Can you tell us a little bit about that? Like, how fast have you been moving, and what have you been doing?
We did all of that in 2018, actually. And so, I'll kind of, tailor it back just a little bit, or take it back just a little bit. And, I'm a chiropractor by trade, but we actually I haven't practiced in a few years. I mean, I still do, adjust with the family and friends and treatments and stuff like that, but on a very limited basis. And so my primary thing over the last several years has been running medical offices. So I had a chiropractic office that I ran for some time and for a couple of years, and then started to integrate medicine into the clinic. And so we have what is called a MDDC clinic. And then about 2 years ago, we completely about 3 years ago now, we cut out the chiropractic from the office because we were finding that we weren't able to help as many patients as we wanted to. And so we removed the chiropractic services from our offices and did full-on medical services. And now our medical offices, we have 3 medical doctors, 5 nurse practitioners, and about 50 employees over 5 locations across South Carolina. We have one here in Columbia, South Carolina, one in Charleston, Greenville, Fort Mill, which is that South Charlotte market, and then North Augusta. And so with those clinics, we're able to now reach more people with chiropractic because now I have a medical team that's on board with chiropractic, and we have built a referral network with local chiropractors, which we were not able to do before, because with chiropractic, we don't refer to each other. And so we're always afraid that the other chiropractors are going to steal the other patients. So just unlike in medicine where referrals go back and forth all the time, in chiropractic it does not. And so I had to remove it from the clinics, and it actually turned out to be very good. So it also reduced our footprint of being able to have smaller offices to be able to expand and grow. And so we expanded from 1 clinic to 5 clinics in an 18-month period of time. And then that was actually in 2017. We finalized that, August of 2017. And then in February of last year, 2018, I expanded into the multifamily space.
So I know you said that, you're trying to mitigate some of your tax obligations there, but was there a book or somebody in your life that kind of pointed you towards real estate as an option?
Well, I mean, I have always been researching, various ways to invest and various things like that. And real estate has been one of those things that I dabbled in, kind of here and there, nothing on a big scale. I mean, obviously we have these 5 medical offices. We don't own the buildings we're in, but we do lease them. And so one of the things that kind of sparked my interest in it was when I left, managing the clinics day to day. I'm still the president. I still get financial reports every Monday morning. I'm still having that 30,000 foot view of how the clinics are doing. And I have a corporate director meeting once a month for about 2 hours that I meet with my team on. But now that I'm stepped away from that, not focused on it full time, I really was trying to find something else that would really make me feel fulfilled, and also make me feel like I'm providing value to others. And that's where I also am a coach and a consultant to other physicians across the country, not just chiropractors, but MDs, DOs that want to have clinics that are similar to mine. And so I consult and coach with them, and those are also some of my investing partners. And so I want to be able to help them, because I know that when you're busy as an entrepreneur or as a clinician, it's very hard to have that time to actually focus on trying to invest your money in real estate when you're doing it on your own. So to be able to have an investing arm where people can actually start to invest with our deals, then it really is, it's very helpful. We started a company called PassiveInvesting.com that allows us to, be able to attract even more than just, people who have known me in the past. And I can start to attract more and more people to be able to invest alongside us on some of these deals, and they can take advantage of the same things that I'm doing, which is the ability to have that tax advantage.
Sure. So when you, with these multifamily opportunities that you're investing or focusing on here now, are they mixed use? Or are they focused on strictly multifamily? What does that type of investment look like?
Sure. So we're strictly on multifamily, no mixed use. Looking for the C class or B class properties that has some deferred maintenance, some value add component to it, and so we're focused. Our group is focused solely on 100 to 150 units or more, and minimum $10 million. So we're not trying to go into the small space and play with some of the smaller mom and pops. We really want to focus on the larger assets, because I want my money to be protected, especially with the capital preservation component of it. And that's one of the best ways to do that is just to buy into larger properties. I think, give you an example. We just purchased a property, closed in the middle of December. It was about a $11 million project. We raised $2.5 million for it. I can't write a check for $2.5 million to buy this property, but with my money, as well as my investor friends and family that invest alongside me, we can take down this property. And so we raised $2.5 billion and did it in about a 4 to 5 day period of time.
Oh, wow. So, we've been looking at larger and larger opportunities ourselves, as we've been progressing. And, as our name implies, REI Rookies, this podcast really is an opportunity for us to kind of teach people what we're learning as we're progressing down this path ourselves. So one of the things that we've struggled with when it comes to reviewing these larger opportunities is figuring out how to estimate the renovations and the like. Is there any strategies or tactics there that you've come up with to help with that?
Yeah. So, we have our group has 3 different people in it. So it's myself, and I have one other gentleman, Brandon Abbott, who is our construction construction lead and principal there. And then I have another one who does all of our financial analyzing and financial due diligence and underwriting and modeling and all that kind of stuff. And so my primary focus is on investor relations, but I'll speak to Brandon's side a little bit, because Brandon and his background, he has a background in property and casualty. So what that means is he used to be an insurance adjuster. And so he has a lot of experience going in and, after a fire or a flood or some sort of, water damage or whatever that happens in a property, whether it be multifamily, commercial, residential, he would go in there and he was able to estimate down to the penny what it was going to cost to get that place back up to where it was before. And so he used that same knowledge and expertise in the multifamily space of us. And he uses a proprietary software, not proprietary to us. It's a different software that somebody else owns, but it's a software that is specific to estimating. And it's used in a lot of different industries. It's a software program called Xactimate. I'm not exactly sure how to spell it, but I'm sure if you Google Xactimate insurance estimation software or something like that, you would come up with it. There is a licensing fee to the software, but what it allows him to do is it allows him to put in the very specifics of what's inside of a unit, and he can put on there the dimensions, draw out the dimensions real quick, put on their countertops, cabinets, flooring, walls, all that kind of stuff, and calculate down to the penny what it's going to cost to renovate. And the reason why it's down to the penny is because this software takes into account the zip code of where that property is, the labor rates in that area for that market at that time. And so when it does the estimation, it actually knows what those labor rates are going to be and actually puts that into the software. And then the other thing it does is it also does 3D modeling. So he actually has a drone that he'll throw up in the air that will actually fly around each one of the buildings and does 3D modeling of the building so we can estimate what the exterior renovation costs are going to be. And then it also flies above and looks at the roofs, the condition of the roofs, and also does measurements of the roofs and allows us to determine what it would cost us to renovate or replace the roofs if that was one of the things that was necessary in order to acquire the property. So there's several different pieces that we use that are kind of advanced technologies like that help us from our capital expenditure and estimating standpoint. And so I would say that the biggest thing is use technology to your advantage, because technology is out there. It's just a matter of trying to find out which one works the best for you and what you're trying to do.
Sure. No, that's really interesting. You're the first one to mention the software and the leveraging the drones to that extent. We have somebody locally here that uses his drone technology to measure volume of things, and he's offered to do something similar to what you're suggesting here. But I think you explained it, clarified it a little bit better as to what is possible there. That's really interesting. So, you've already mentioned about how you consult with other doctors and health institutions to do what you're doing there. What are you doing regarding helping others getting involved in the real estate investing itself?
Sure. Well, I started a group called Multifamily Investor Nation back in 2018, and about September or October of 2018. And it's interesting because I don't tell everybody this, Jack, but I have I like to. One of the things I like to do to relax is to get in the hot tub. And so in the hot tub is where I get a lot of my ideas. And I was sitting in the hot tub one day, and this idea came to me of leveraging the Meetup platform to create a national Meetup group organization. And also, and I was trying to come up with a name. Of course, whenever you're coming up with the name, you got to make sure the domain's available. So I went to GoDaddy and started to figure out, what was available domains. And multifamilyinvestornation.com was one of those names that was available. And just to be on the safe side, I also registered apartmentinvestornation.com as well. So I have both of those domains, but we are using Multifamily Investor Nation as that arm to be able to help other people. And so we're doing weekly webinars. We don't charge for them right now. They're all free. They're all on our YouTube channel. And we also have a closed Facebook group for this particular group as well. Also have a Facebook page. And so we have almost 2,000 people on the Facebook group right now. And then we just actually today crossed over the 3,000 member mark on the Meetup platform. And so it's been a very fast-paced growing group that we put together. And then we also have an event next week coming up. It's going to be called the Multifamily Investor Nation Summit. We have over 55 speakers and 1,000 investors and attendees coming to this event. And it's going to be pretty exciting to kind of see how everybody's coming together. It's an online virtual event, so you don't even have to leave the comfort of your own home or office. You can participate in the event. And then we also are going to be recording every single one of the sessions. And each one of those sessions will be available for anybody, even whether they were on that particular session or not. All the paid registrants will get access to those. So it's a way to be able to get a good input into multifamily. So if you've been curious about multifamily or you're very dedicated to multifamily, this will give you a really good understanding. We have just about every single speaker on here is representing every single area of multifamily in the industry of the United States. So there's nowhere else in the entire country that you're going to go to for a live event, in-person live event, you're going to get this many and this quality of speakers. Is because it's a virtual online event and people can now carve that out. I have some speakers that are going to be on vacation in the Bahamas and Australia and across the world that are actually taking time to dial in and actually participate with our group.
Oh, that's fantastic. So where can they find out more information on that? Like, is it at that multifamilyinvestornation.com?
Yeah, so you can actually there's an event page set up for it. So they can easily just go to mfinsummit.com. And then once you go there, there's the whole list of all the speakers and the schedules up there and everything. And so if you're interested, if somebody is interested and wanted to attend that event, we'd love to have you. We'll also be doing another one in June. So if for some reason you can't make this one, or you listen to this after the event's over, you can also go to multifamilyinvestornation.com and sign up on our email list, and we'll let you know when the next one will be available, which will be at the end of June 2019. And if you'd like, I can also give your group a promo code so they can get a discount as well. So is that okay with you, Jack?
Yeah, that'd be great.
Okay. We'll just use the actual promo code ROOKIE, ROOKIE. And whenever you go to the website there, you'll put in your email. They'll go to the ticket checkout page, and this will be a place to put your promo code ROOKIE, and you'll get $100 off your ticket.
So that's fantastic. Thanks for offering that to our listeners. That's great. So, so another one of our challenges when we're, to just change the subject a little bit, is when you're assessing these properties and you're looking at performas and capex and cap rates and everything, what are some of the telltale signs that you're looking at actual information? Like what are you looking for that pops out to you, making it a good deal or a bad deal?
Well, there's a couple of different things. I mean, obviously, you have to look at you have to look at the expectations of the seller. And a lot of times, the expectations of the seller are based on the broker, especially in the space that we live, because we're talking about these larger, 150 units or more, 10 million plus. So we're always going through a broker in that space. And so, even in the smaller spaces, if you have a broker involved or an agent involved, a lot of times it's that broker agent that's kind of got to the seller to tell them what their value and what they can get, which is how they sell the seller on giving them the deal to try to sell it. And so one of the things that we just found out recently on one of our products, when we were looking at it, we were actually next week on the 15th going to be submitting an offer on a property. And one of the things we found is in the pro forma that the broker put together for the seller, they assumed the same 2017 taxes for the 2019 taxes. And so it's when we started to do our evaluation, we figured out that the difference was going to be about $150,000. So you have to do a tax adjusted T12, not just a standard, T12 taxes. You have to look at a tax adjusted T12 to figure out what that new NOI is going to be and base it off of that. Because if you base it off of the other, then you're actually going to be buying at a different, you're going to be buying it and overpaying for it. And so sometimes the sellers will come to us and they'll say, not the sellers, but the brokers will come to us and say, we think this is going to trade at, 90 a door. Well, when we start to look at the numbers and figure out that the taxes are off, a lot of times it's going to be traded less than that because of the taxes being so high. And so the taxes are definitely something you have to look at. Now, as far as, looking at the pro formas, another thing that we always try to look at is whenever you're looking at the pro forma from a broker, you're going to be seeing what the broker has put together. And you have to understand that the broker is trying to sell you something. And so they're going to cherry coat this thing as best they can and make it look like the best deal in the world, which is their job, right? But as an underwriter and as somebody who is analyzing the deal, you have to understand that piece of it so you can look at it with a different lens. And so on this exact same property that we were looking at, just kind of thinking this property for you, Jack, because it has some good examples in it. There's two types of comps. So this one, they had the comps, which were the rental comps. And then, of course, it has the sale comps, right? Well, in the rental comps, there was only one. This property was actually built in the mid-2000s, and only one property was built around the same time frame. All the other ones were built in the last 3 or 4 years that they were trying to put in as rental comps to tell us that we could push the rents up to those rents because they were in the area. The problem with that is that those are newer properties, so of course they're going to be able to command more rent, but we're not going to be able to push to those levels with a property that's 10 years older. But they're going to try to use those same numbers to try to puff up the numbers and puff up the projections so they can make it look as good as possible.
Sure. So
that's one piece of it. And then the other thing was the sale comps. Not one of the sale comps was actually in the state that they were actually doing it in. So it's a property that's close to North Carolina, South Carolina border. And so all the comps they were doing for sales comps were in North Carolina. None of them were in South Carolina. And so, but unless you actually go and pull those properties up that they did comps on, you wouldn't know that. So they don't stick them on a map sometimes. A lot of times they'll just throw out the names of the complexes and tell you that the date they sold and the valuation and the NOI and the cap rate that they bought it, they traded at. But you have to really look very granular at that broker designed pro forma so that you can make sure that your projections are based off of reality and not somebody just trying to sell you something.
Right. That's interesting. And it's one of those things that I don't think a lot of people would double check. I find that really interesting, especially regarding the comps and the year built. We see that quite a bit around here, where people are constantly comparing their comparables, their comps to something that was just newly constructed. And that can really throw things off. I'm glad you brought that up. That's really interesting.
Well, and I think that one of the biggest things that you have to realize when you're first getting into this space, whether it be multifamily or single family, whatever, is that one of the reasons why I was able to move as fast as I was is that I hired a mentor to help me. So I didn't just figure all this stuff out on my own. I actually paid some money, had somebody help mentor me along the way. And my criteria though for finding someone to mentor me was not the price. I didn't really care what it cost because I know it was an investment and it was going to pay off as long as I did and found the right person to mentor and coach me. And so one of the things I always look for in a mentor is I want to find somebody that is where I want to be right in the future. They are right now where I want to be. Not, they are, already past that. They're there like right now, I want to be there. And I want to get them to coach me. I don't want to have one of their students coach me. I want them to coach me. And so I'll pay a little extra for that because I want that expertise, and it's paid off for me because I've been able to call that mentor whenever I need them to be able to help me in different questions that I might have or different, things around a property or whatever. And that would be the biggest thing I would say too, is these are the types of things that you learn when you have a mentor that can help you walk you through a property.
That probably leads to me to a few of the things that I usually ask people is, what would you recommend on how would somebody get started in multifamily investing? But it sounds like you kind of answered that already by finding a good mentor.
Well, I mean, obviously, coming to the event, on, in January 17th, 18th, and 19th is a great way to get a great feel for just about all the mentors in the space. There's a few mentors that aren't going to be there, but with 55 speakers, you're going to pretty much get all of them. And you'll find one of them there that you'll connect with. But you got to be able to go find out who you connect with the most. And at an event like that, it's very powerful for that. I mean, I have people asking me every week if I can help mentor and coach them. And I always tell them no. I don't have the time, energy, and headspace to do that. And so I would rather focus on acquiring more properties because it's a bigger upside for me. But then, of course, the purpose of me creating the Multifamily Investor Nation was not to create a mentor and a coaching platform. The purpose of it was to bring together as many multifamily investors as possible because there's two things that I'm looking for. Number one, I'm looking for groups that want me to be able to help them on their side as a KP or key principal or a loan guarantor. So even though these larger properties have non-recourse debt on them, they still have to have a loan guarantor on them. And so I can help with that because there's certain net worth and liquidity requirements that these lenders require in order to be a loan guarantor. And so I can jump on to somebody's general partnership and help them with that aspect of it. And then the second thing I'm looking for is obviously passive partners. And so that's one of the reasons why we created PassiveInvesting.com is for people who are, maybe interested in multifamily, but they don't have the time and they don't want to, but they still have that kind of FOMO, that fear of missing out on and taking advantage of multifamily and real estate in general. And they want to just invest with somebody else that they trust. That's a great sponsor with a great track record and has a good business acumen. And that's really where our group comes into play. There is with our group, we have a lot of those different pieces in place that do really well.
Sure. So here's a couple rapid fires for you. So what are you currently reading right now?
Right now, I am reading The 10X Rule by Grant Cardone.
Oh, good book. Yeah, that one was one of those eye-openers for me regarding setting goals and targets.
It's the second time reading it. So I've actually made myself a note to read it every January. So it really does help motivate you to get to set the stage for the year. So, some people like Grant Cardone's. He's usually a love or hate relationship with him.
Right.
But I do like a lot of his content.
So, and then why don't you also have a podcast, right?
I have two of them, actually. I have one called Tough Decisions for Entrepreneurs, and it can be found at toughdecisions.net. It's my wife and I that do that one. It's a daily podcast. So every day we're putting out an episode. They're short 15 to 20-minute episodes where we interview high-level entrepreneurs from around the world about tough decisions that they make in business and some of the lessons they learn through those tough decisions, whether they have good outcomes or bad outcomes. And then the other podcast is actually being launched not this week, but next week during the event. It's going to be called Multifamily Investor Nation. And with that one, we're interviewing real estate professionals that are in multifamily that are actually closing deals. So they cannot be on the podcast unless they actually close a deal. And then we walk through that deal that they closed from all the specifics of how they found the deal, working with the brokers and the lenders and the sellers and the due diligence and all of that kind of stuff, inspections, and then all the way even to some of the post-closing stuff on how they're working with investors and raising capital and all that stuff.
That's some of our favorite podcasts. When I was listening to podcasts when first starting, the ones that I always got the most out of was actual examples and walking through those case studies. Those were always great episodes.
Oh, yeah, no, that's one of the reasons why I created it is because there wasn't really a podcast out there for multifamily that focused strictly on people who are closing deals.
Sure.
And so that's one of the reasons I kind of put a poll out there to our group, and they were all on board with it. And, basically all these, I have a lot of episodes already. And so this one's going to be more of a weekly podcast. They'll be a little bit longer form, about 45 minutes to an hour, and doing really well. I even had one on just today. I recorded one from a guy who's been doing new construction and development for affordable housing in multifamily. And I didn't really understand that space at all. And now after having him on and then interviewing him, it's been quite an eye-opener for it, and looking forward to releasing that episode because there's a lot of people who have asked me about new development versus just, buying an existing building. And there's a lot of tax credits out there, and learning how all that process works was really kind of cool to be able to kind of walk through that.
Sure. How do you, you just spurred another question. How do you find a way to avoid the shiny object syndrome? Like in our case, we hear a new strategy and we want to try it right away. It's been a tough go when it comes to that piece of it for us.
Now, you're talking about a new strategy or new thing as far as like underwriting, or as far as like what asset class, or what are you referring to?
Yeah, it's mostly asset class. And frankly, exit strategy. You start to specialize in something, you kind of find your niche, you get comfortable in it. Next thing you know, we have that situation here too, where we have the opportunity to talk to quite a few people on the show, and they spur all these different ideas. And the next thing you know, we're trying a new strategy or exit or an investment class that we hadn't previously.
That's the nice thing about hosting a podcast, isn't it? Matter of fact, the event that I'm doing next week, the Multifamily Investor Nation Summit, was sparked by interviewing somebody who was already doing events like this, but in a different industry. And he sparked my thought of, no one's doing that in multifamily. And I decided to go ahead and do one. And that was about 2.5 months ago that I did that.
Sure. Well, I could talk to you all afternoon here. So, and I really appreciate you giving us the time you have so far. But why don't we just cover a couple of those quick things again? You like you said, you have your upcoming event. Mm-hmm. Where do they go again? And we again thank you for the code for their discount.
Yeah. So if you're interested in finding out a little bit more about multifamily and that asset class, you can go to MFIN Summit. That stands for Multifamily Investor Nation. So MFINsummit.com and use the promo code ROOKIE, ROOKIE, and you can get a discount of $100 off of your ticket. And we're glad to be able to, provide that to all the people who are listening today. And thank you so much, Jack, for having me on. And if you are on and, maybe you're kind of on the fence as to whether or not you want to do this actively or passively, well, you can always reach out to us at passiveinvesting.com and let us know that you're interested in being one of our passive investing partners. And then the next deal that we have, we can send you the information on it. And if you want to invest with us alongside us, you can.
Well, thanks again, Mr. Handford. I almost called you Dr. Dan again. So really appreciate your time. There's been a lot of great information, and I'm looking forward to checking out your upcoming event. It sounds like an awesome opportunity.
I really do appreciate it, Jack, and I wish you guys the best.
Thank you.
All right, guys, that was Dr. Dan Hanford being interviewed by Jack. Make sure you check out all the links to his material in the show notes page. And if you found some value from the show, make sure you hit patreon.com/REI Rookies. Throw us a bone, would you? And if you want to shoot us an email, hit us up at info@reirookies.com. You can also find us on Facebook, Instagram, and Twitter at REI Rookies. And if you like what you're hearing, head over to iTunes, subscribe, rate, and review the podcast. It really helps other rookie investors out there find the show. Remember, get off the bench and get into the game. We'll see you next time.
I don't like to tell a man what to do with his money, but if you ain't investing in property, then you're dumber than a dummy.
I'm not dumb. I'm smart.
Well, buy property. That's my advice.